A very good morning, good afternoon. Welcome to this week's Look Ahead video. Now, just a quick reminder, why we look at the calendar in so much depth and detail. We do it to spot high probability trading opportunities in advance. On Friday, the 3rd of May, we had the US non-farm payrolls print. And on the cheat sheet for the day, we were looking forward to a weak print to bring forward the prospect of US rate cuts. And we're expecting dollar selling if we saw a print that came in like this. We wanted to see the headline, 180,000 or lower. We looked at the forecast distribution. We saw that would be enough of a print to surprise the downside. Unemployment rate at 3.9%, average earnings year on year at 3.9%. And we were expecting to find strong euro-US dollar buying if we saw that kind of print. Now, in the event, that is exactly what we did get. We got the headline coming in below 180,000 at 175. Unemployment rate, 3.9%, in line with a high expectation. Remember, that's a negative thing, more people unemployed. And we had average earnings year on year coming in at 3.9% below the market's minimum forecast. So that was a deflationary print. Yes, we had one upward revision for the headline, but that wasn't really going to change the market's dynamic, and we're expecting dollar selling. And we got a good opportunity to go long the euro-US dollar. A number of people took an opportunity going long the euro-US dollar, also going long S&P 500, taking that initial spike and taking profit as we hit into that big round 1.0800 number. And we, many of us did that live. Now that's why we look at these high calendar events to find high probability trading opportunities. Now they don't always work out. You can see the ISM non-manufacturing PMI came in below market's minimum expectations. Should have sent the dollar lower again, and we didn't quite see the reaction we were anticipating, although the dollar eventually wound its way lower, and that the euro-US dollar a bit higher. But it was not the kind of reaction you expect from the print. But that's why we look for these high probability opportunities. You obviously don't get them all, but when you do get them, like with this non-farm payroll print, you can see it's a good opportunity where the market should move in one direction for a short period of time, and it can be a great opportunity, particularly to jump in when you see the print moving in the way that you're anticipating, and that gives us the best opportunities for high conviction trades. So, what do we have for this week? Well, let's take a look at the calendar. First of all, coming up on Monday, there is an interesting data point. It's New Zealand inflation forecast. Now, if you look at the last batch of New Zealand data we've had, what you can see is that the headline came in at 4% and the quarter-on-quarter reading come at 0.6%. Now, this was pretty much in line with expectations, but crucially, it was above what the RBNZ have been projecting. So what I'm interested to see on Monday, and it is more tricky, this data point, so don't worry if you miss it, but it's worth looking at, is if these inflation forecasts for 2 years come in significantly higher than the prior reading, and I don't have a projected reading for this, so something that sort of surprises markets, and this is a little, certainly higher, maybe 3% or higher, then you're most likely to see a little bit of strength in the New Zealand dollar, because it will show that inflation data is stickier, and that should mean that the RBNZ need to keep rates higher for longer. So inflation data is going to be crucial for the RBNZ. It's one just to keep an eye on, maybe not one to trade live, but maybe one to look at the following morning and to see for a potential intraday opportunity. So it comes with a little bit of a health warning, that New Zealand inflation print, but nevertheless, we want to take a look at it. On Tuesday, we start to get more interesting with the UK employment data. Now, the Bank of England met last week, and what the Bank of England basically did was they had one extra monetary policy committee member move to a vote where they're looking for a rate cut. They revised CPI inflation projections higher, GDP growth lower, and they kept the line in the statement that they're expecting, policy to remain restrictive until they've got inflation under control. So they kind of moved towards signaling a rate cut. But what we need to see, and the pound is very stretched at an index level to the upside, what we need to see is any weak data that's really strongly weak should result in some significant selling in the pound. Okay, so what I want to see here is the unemployment rate coming in much higher, average earnings coming in much lower than markets are expecting, and I want to see the claimant count, unemployment change increasing. Okay, so we want to see more people out of work. Not that we want to see people out of work, but in order to sell the pound, obviously, right? If we see those readings, then that's much more likely to result in the pound selling off. It's definitely an event to be looking at. And if you just look at the unemployment rate, see it's 4.2%. If that comes in above, this 4.3% from July, shows weakening in the labour market, deflationary, pound selling. If we see average weekly earnings growth moving significantly lower, that shows weakness. And if we see the claimant count change increasing, up above that 23 plus 4, 0.4 thousand print, then that will show that more people are out of work, and that should be deflationary. So it should be pound selling. Good opportunity, definitely one to look at, not one to miss. Now, the other opportunity as we go through this data is the PPI print. Now, the CPI comes out for the US this week, and that's going to be super important. But, a big miss in the PPI print to the downside or a big beat could really move the dollar. The Fed, on their 1st of May meeting, confirmed that recent US inflation data has been disappointing. So they are going to be super focused on inflation data coming out, right? They really, really want to see a clear sign that inflation is falling. And if this comes in above market's maximum expectations, we'll likely see some dollar strength, and that will increase expectations for the CPI print on the following day. So PPI, look out for dollar volatility on that reading. Strong reading should support the dollar. Weak reading should pull the dollar lower. But the CPI the following day is the main event of the week, not to miss. Got the Aussie wage price data coming out. Now that is going to be interesting. The RBA in a more neutral stance, where they are not ruling anything in or out. So strong wage data is going to make interest rate hikes more likely. Weak wage data makes interest cuts more likely. So you should see a two-way opportunity for the Australian dollar. If we get a surprise print to the downside, that could provide a nice opportunity in the Australian dollar. We'll have that fully prepared for on the cheat sheet. They've got Eurozone GDP flash estimate. We know that Eurozone growth is pretty slow. We might see a little bit of a move on the euro with GDP, but ECB expected to cut rates in June. We know that growth is pretty stagnant in the Eurozone, so it's unlikely to have much of a move, but we'll cover it nevertheless and make a decision near the time whether that makes our cheat sheet. But Eurozone data is much more stagnant at the moment because markets are not pricing in an ECB rate cut for June, and what happens after June is much more important. But the CPI print is going to be interesting. If you just take a look at the core inflation data out for the US, core is at 3.8, headline inflation is 3.5. So if we look at the print for Wednesday, what we want to see is inflation either moving sharply lower below market's minimum expectations or sharply higher. If we see a sharp move higher in the CPI print, then we'll likely see some significant dollar strength because the Fed's already said that recent US inflation has been disappointing. If this disappoints, then look for dollar strength. Okay, and you can see some significant euro US dollar downside on that. So that's going to be the event. But also, if inflation surprises to the downside, then people are going to go, oh, relief. You should see stocks rally strongly, the dollar sell off, and you should see the euro US dollar pick up nicely. Big event. We'll have that completely ready, and we'll cover that live next week. So do not miss that event. It's one not to miss. Then as we go through US retail sales, that's released at the same time, so we'll factor that in as we make the decisions. On Thursday, Japanese GDP, unlikely to move markets much. Australian employment data. Remember, central banks see employment as inflationary or deflationary. Strong employment is seen as inflationary, and so should support the Aussie. Weak employment data is seen as deflationary and should cause the Aussie dollar to sell off. So what we're looking for here is big shifts in the labour market to give an opportunity in the Australian dollar, and we'll cover that nearer the time. Going through the rest of the afternoon, got some US industrial production, shouldn't expect much out of that. Bit of New Zealand PPI, shouldn't expect much reaction to that. The Eurozone HICP, that's their inflation readings for the Eurozone, that shouldn't get any reaction. It's the final reading, so typically you don't see any reaction for those final readings. And that should close out the week. But the main event to be looking for, okay, it's a bit of Chinese data as well. We've seen a nice recovery in Chinese stocks recently, so a big beat there, and you can see some of that carry on. But the most impactful event is going to be the CPI print that we get on Wednesday. So that's what we're looking for. Don't forget to look at the cheat sheet. We will have a full preview and plan up ahead so we can see exactly what to look for, and I will be covering some of these events live next week. We'll definitely look at the UK labour data, and we'll also take a look at the US CPI data as live risk events. So I will be there with you over those events. Okay folks, take care, and I wish you a very good trading week. Goodbye.